health and educational cess. If any person's income is more than 50 lakhs, we need to add surcharge also. So these are the basic 3 steps here. Please observe here. Is asking us to compute the tax liability of an individual assessee from the particulars given below. So you need not bother about this assessment here. This is a previous year edition. I don't have the recent edition, but it is not going to bother with your tax rates because the tax rates are same applicable in that assessment year also. In this assessment year also, the rates are same. That's why no need of worrying about these assessment year which are you are viewing in my screen. Here, agricultural income is 20,000, non-agricultural income is 3,40,000. So for these figures, he's asking us to calculate the tax liability. So what I told in step 1, integrate total income means agricultural plus non-agricultural. So if you add both the figures, you will be getting 3,60,000. So after clubbing that, you need to calculate the tax liability. This is the first step. So in order to calculate the tax liability on 3,60,000, you know very well, if information is not mentioned about a particular assessee's age, we should assume that the assessee belongs to below 60 years of age. So if he is below 60 years of age, tax rates applicable are up to 2,50,000, no tax is levied. Beyond 2,50,000 and up to 5 lakhs, it is 5%. From 5 lakh onwards to 10 lakh, it is 20%. Just a moment. Hope you remember whoever attended yesterday's class. Here. So up to 2,50,000, no tax. From 2,50,000 to 5 lakhs, 5%. From 5 lakhs to 10 lakhs, it is 20%, which is above 10 lakhs, that is 30%. So now, according to these tax rates, we are going to calculate, even if the assessee is having agricultural and non-agricultural income. So, just a moment. Here it is. So tax on integrated income. So below 2,50,000 nil, and income which is above 2,50,000, that is only 1,10,000. How it arrived? From 3,60,000, we need to deduct 2,50,000. Then you will be getting 1,10,000 as balance, which is above 2,50,000. So if you calculate 5% on that figure, you will be getting 5,500. This is the basic tax liability which we arrived in step 1. So in order to compute, we require 3 steps. Now we are done with first step. In second step, net agricultural income is to be added to exempted limit. Exempted limit in what? In non-agricultural income. Non-agricultural income, exempted limit is 2,50,000. As I have shown just now itself, the slab rates. So Net agricultural income is 20,000. For that, you need to add that basic tax exempted limit, 2,50,000. So if you add both the figures, you will be getting 2,70,000. And repeat the procedure regarding tax computation. So here, tax on 2,70,000, we are going to calculate like below. For first 2,50,000, no tax liability. $2,70,000 minus 2,50,000, that comes to 20,000 itself. So for that, you need to calculate the tax at the rate of 5%. How did you arrive at 20,000? That is 2,70,000 minus 2,50,000. Why we have taken 2,50,000? Because it is exempted tax income. Exempted income. So that is 20,000. Sorry, 2,000. In the first step, we arrived 5,500 as tax amount. In the second step, we got only 1,000. So as per the sequence, in third step means we need to deduct the step 2 figure from step 1 figure. So you will be getting 4,500. For that, we have to add 4% of health and education cess. So clearly they have given 4% need to be calculated on which amount? 4,500. So you will be getting 180 rupees. If you add that 180 to that basic tax, you will be getting 4,680 as tax liability. If a person is having the income which is like agricultural income 20,000, non-agricultural income 3,40,000. So this is the procedure for here. I would like to explain few of the incomes. Means in order to make distinction between agriculture. Here he's asking about income which is derived from land used as stone quarries. So these are not comes under agricultural income because it is not involving in the cultivation process. Though it is relevant with the land, but it is not related to cultivation. So a few of the examples they have mentioned and the solutions are also there. So you can observe here, it is not an agricultural income. It is not involving cultivational activity. Likewise, you can practice like that. Sale proceeds of rosewood trees of spontaneous growth. So here it is a spontaneous growth, not a cultivation. That's why no agricultural operations are involved. That is why it is also not an agricultural income. But if you observe the second point, that is profit made by a trader in purchasing a standing crop and selling its produce. So here he is a mediator. So since the trader is not carried out any agricultural operations which are related to cultivation, it is not agricultural income. For example, if a farmer is selling his own crop, then that will be considered as agricultural income. So this is a difference between agricultural and non-agriculture. And one more definition is left over. This is also important. Gross total income and person. What is actually gross total income? As I explained in last class, according to Income Tax Act, the sources of incomes have been categorized into only 5 heads. Means any income which should be fall under these 5 categories only. No other alternative is there. So the aggregate of income computed under the 4 heads means that is income from salary, income from house property, profit and gains of business or profession, capital gains, income from other sources. So whatever the income we computed under the following of these heads before making any deductions, which are under 80C to 80U, are called as, or we can say that it is called as gross total income. Means from 80C to 80U, what is it actually? There are few deductions are admissible under Income Tax Act, which are changing year to year according to the budget. So few deductions are available or admissible to the total income. So here gross total income means before making such deductions is called as gross total income. Any income we arrived before making that deductions is called as gross total income. So if you make any deductions adjustment, that is called as total income, which is mentioned in section 2 subsection 45. So here you can observe total income of an assessee is the aggregate of the income computed under the above 5 heads as reduced by the deductions permissible, means admissible under section 80C to 80U. Means without making any adjustments of deductions, it is called as gross income. After making adjustment means total income. Then one more definition regarding person. We might be getting a doubt regarding assessee. Means a person, individual person will be considered as an assessee or a group of people. Means if a partnership firm, collection of few partners, is that also considered as a person or not? Means in the income tax purview, the following are the persons as treated as assessees. So the term person includes the following. We know an individual can be called as a person. In addition to that, a Hindu undivided family means a Hindu undivided family might be earning income. On that income also, tax is going to be imposed. It is not exception to the company also, and a partnership firm or body of individuals. All those comes under the category of persons. So each and every definition clearly mentioned in the Income Tax Act. With the inconvenience.
Madam, these are all in textbooks, madam?
Yes, yes.
Page number, madam, 18.
Just a moment. 24.
24. Okay. Income tax 2 now, madam?
Income tax 1 only. Yes.
1 now, madam. Okay.
Yes. So gross total income person. These are the definitions which are sufficient for your portion. Next, I will be dealing with another concept. Please practice the questions which are mentioned in Check Your Progress so that you will be getting clear idea. Here it is define agricultural income and how to compute the tax on agricultural income by summating the or integrating with non-agricultural income. These objective type questions are also very much useful for your examination. So here assessment here. These. Now come to the next part of this first unit, that is capital and revenue. First unit is consisting of only 3 chapters. It is a basic introduction about the income tax. Second one is with definitions. Third one is with capital and revenue. These are the most important theory questions you will be getting in the examination. Actually, income tax is a tax on income. So we will be having little bit confusion about income and receipt. We can say that all the incomes are receipts, but all the receipts are not incomes. So the tax is not computed on all the receipts, only on incomes itself. So that's why it is inevitable to make a distinction between capital and revenue. So receipts, we can say that receipts are of 2 types, revenue receipts and capital receipts. What it is actually? We can say that if a receipt is a regular, or we can say that routine and recurring, then we can say that it is a revenue receipt. It means a salary, every month you will be getting. But whereas the compensation, please mute yourself, all of you. If any amount you are getting for the retrenchment of job, we can say that it is a capital receipt. Means you will be getting only once for the removal of the job, or we can say that for the retirement of job. So salary can be treated as a revenue receipt, but whereas other amounts are treated as capital receipts. If the receipt is non-recurring, then only we can say that as capital receipts. So all the capital receipts which may or may not be taxable. So that's why we need to clearly make a distinction between capital and revenue receipts. So the capital gain is taxable, but whereas the capital receipts are not taxable. For example, if you take a loan from the bank, we can say that it is not an income, it is a just receipt. That loan amount will not be imposed tax, means tax is not going to be levied on your loan amount, isn't it? So that's why receipt is different, income is different. So in order to know that clear distinction, I can show the example. For example, if you sell any gold article for few amount, definitely it is not an income, just a receipt, isn't it? So because it is not a continuous income, by disposing or else by sacrificing our ownership rights, we are getting somewhat receipt. If it is a recurrent receipt, we can say that it is an income. So few receipts are also taxable. I will explain those list of items also. Here it is, meaning of capital and revenue. So revenue and capital are also known as recurring and non-recurring. So first one is recurring, revenue means, capital means non-recurring. So first of all, these are the two terms, capital and revenue, which can again be segregated as capital receipts, revenue receipts, capital incomes, revenue incomes, capital losses, and revenue losses. So in order to make those distinctions, first we need to find out what is capital and what is revenue. So here clearly mentioned as revenue means it is a recurring item. Capital means which is not recurring item. So any expenditure which does not repeat generally is known as non-recurring. But the expenditure incurred every month or frequently, those are called as revenue in nature. So in page number 33, clearly they mentioned about which is capital and which is revenue items. Here I am not at all explaining as capital income and revenue income. Just I am explaining what is capital in nature and what is revenue in nature. So in order to make the distinction, few points can be observed. If the expenditure is for the initial outlay, or else we can say that in order to set up a business, we need to spend some amount in order to start a business or come to an existence. So such type of expenditures are called as capital expenditure. For example, purchasing of plant or machinery, taking a building on lease, or setting up of furniture. All those are not recurring in nature. So those expenditures are called as capital expenditure. Whereas in order to produce goods or services, we are going to purchase few materials. That may be any item which are used as materials for the purpose of production. All those are, we can say that recurring in nature, means every day, day to day, month by month, you need to purchase those materials. So whatever the amount spent on materials is called as revenue expenditure. So in order to set up a business, you need to spend some amount that is called as capital expenditure. So here we are bothered with the terms capital and revenue, not income, like that. So in order to make a distinction, that may be income, revenue, loss, a receipt, whatever it may be, the terms relevant with capital and revenue. So this is about first point. So in order to run a business, if the expenditure is for the purpose of acquiring an asset, By acquiring, if you are running a business out of that asset with a view to produce profit, it would be a revenue expenditure. Let me give an example. If you purchase a car for the purpose of your own family purpose, then we can say that it is a capital expenditure. Means you are not at all going to buy frequently, recurrently. But at the same time, if you are maintaining a taxi service, so if you are a taxi owner, what you are going to do? For that vehicle, through that vehicle, you will be earning somewhat amount as an income. So that's why if you purchase an item for your personal purpose, which are not in a recurrent nature, then we can say that it is a capital expenditure. But whereas if you are dealing with a taxi service, then that expenditure will become a revenue expenditure. So the situation bothers, means from which point of view you are purchasing. If you purchase a land or building for your own purpose, then we can say that it is a capital expenditure. If you are doing a real estate, means it is recurring. You will be purchasing ventures and you will be selling by converting into plots like that. So that is revenue expenditures, means circumstances. Next, advantage for a limited period. For example, if you purchase any item by spending some amount, if that advantage is for a limited period, means for a month, up to a month, up to a year, then we can say that it is a revenue expenditure. Otherwise, if that expenditure advantage is spreading to a long period, then we can say that it is a capital expenditure. And one more interesting point, that is mode of payment is irrelevant. Means, for example, if you take a rent amount, if you are handovering the rent amount bulkly, means up to 6 months of rent to the owner, even then also it will be considered as a revenue expenditure only. It is not a capital expenditure. Means it is related to every month. Though you are paying lump sumly to the owner, but it is considered as revenue in nature. Means mode of payment is irrelevant, whether you are handovering bulk of amount at a time or frequently, recurrently. Next one is the stock in trade. I have just explained now while taking the example of the taxi service. Next, let us come to the point of capital receipts. As I told just now, we can classify into capital receipts, revenue receipts, capital incomes, revenue incomes, capital losses and revenue losses. One by one, let us see. Capital receipt is of non-recurring nature. If you purchase land, building, plant and machinery, we can say that that is a capital expenditure. When you dispose those items, whatever the amount you incurred, whatever the amount you received on disposing or selling all the capital assets, we can say that that is considered as capital receipt. Why we need to make a distinction means, while explaining about the slab rates, I have given the sources of incomes, which is categorized into 5 heads. That is salaries, house property, profit or gains from business or profession, capital gains and casual incomes. So first 3 categories of incomes are taxed at slab rate, but whereas that capital gains, so that is capital income, So capital gains are tax rate flat 20%. And casual gains, casual incomes are tax rate flat 30%. So if you don't make a distinction between these incomes, how we can calculate or compute the tax liability? So that's why distinction, making a distinction is important. So if it is a capital income, that is to be taxed at flat 20%. Otherwise, at flat, not flat actually, that's slab rate. So in order to find out the accurate tax liability, we should make a distinction. So if you dispose capital assets, you will be getting the capital receipt. That is to be taxed at flat 20%. And few more items are mentioned over here, which are relevant to capital receipts. Any compensation which is received by a partner from another partner for relinquishing all the rights in the partnership. This is going to happen in the partnership firm. If any partner is leaving the firm, definitely, according to the agreement, one partner is going to pay the amount to the existing partners, or else existing partners are going to pay somewhat amount to the relieving partner. So all such type of amounts are called as capital receipts. Third one, you know it very well. Any compensation amount received for the loss of employment. If you get any amount on behalf of salary, that is a capital receipt. Whatever the compensation for the loss of employment is a capital in nature. Here you can observe this 9th point, receipt of proceeds of life insurance policy on its maturity. When you surrender your life insurance policy, or whatever the proceeds you are getting after the maturity of the life insurance policy, that amount is called as this capital receipt. Now, what is revenue receipt actually? The high charges of the capital asset. Means when you purchase an asset, and if you are giving on lease that particular asset to any other person or party or else to company, you will be getting income recurrently, frequently. So then we can say that it is a revenue receipt. Okay, the second point, the proceeds of sale of forest trees when they are cut at the stem and not with roots. Means if you take out the root side, if you are selling, through that if you are getting any income, that is called as capital income. Otherwise, just you are cutting the stem only, not with the roots, then that is revenue receipt. Through this, you can clearly understand the distinction. And any amount recovered by the way of interest. So if you have given any amount to another person on interest basis, so you will be getting periodically the interest amount. So that is revenue receipt. Please mute, all of you mute yourself.
So much disturbance, ma'am.
Yes, yes. Is it okay now? I have kept in mute. Next, interest on refund of income tax. Like that. So many items are there which are not in, means which is in recurring nature. Those are called as revenue receipts. Now let us come to the here in check your progress also, many of aspects mentioned to determine whether it is a capital nature or revenue in nature. So you can practice, you will be having answers also.
Hello,
Now let
students.
us, please tell me.
You explain practical questions?
Practical means problems, are you asking about?
Yes, ma'am.
Actually, problems are not covered in the first unit, only 1 or 2 problems. Okay, from second unit, second block, you will be having problems. I will explain.
Okay, ma'am. 10 marks problems, ma'am.
Yes, yes.
Okay.
In the beginning of the class also, I have explained regarding the computation of tax liability on agricultural and non-agricultural income, isn't it?
Yes, ma'am. Okay, thank you.
That will be covered in the examination. Now, revenue expenditure. So expenses incurred on the purchase of goods for resale will be revenue expenditure, obviously. When you are doing a business, you will be purchasing stock and you will be selling those stock. So amount, whatever you spent on that particular stock will be in recurring nature. That's why it will be called as revenue expenditure. So similarly, amount spent on keeping the asset intact is also revenue in nature. So in order to maintain a particular asset in a proper condition, so that is also considered as revenue expenditure itself, means somewhat amount spent on repairs like that. Not installation charges. Again, installation charges we can consider it as capital nature, but whereas repairs, we can consider it as revenue in nature. So following are the examples of revenue expenditure. So payment of annual sum by cinema proprietor for the use of electrical accessories, and expenditure with a view to resume business, which had ceased to work. So in order to resume the business, he need to spend some amount. Here, 9th and 10th one, you can easily understand these points. Expenditure incurred in connection with the procurement of raw material. So in order to bring the raw material into your business, you need to spend on transportation or labor and whatever it may be, insurance, all those are called as revenue expenditure. Municipal taxes, all those. So list of items are there. You please read all the list of elements which are relevant to capital and revenue. Here, brokerage paid for the purpose of raising loan in order to set up your business. So that brokerage is going to be paid only once at the time of raising the loan. So this is not a recurring in nature. So we can say that will be considered as capital expenditure. So likewise, you have to make distinction. Next one is interest on loan, the 7th point. So interest on loan you need to pay every month, means recurring in nature. So we can say that expenditure is revenue expenditure. Just a moment. Sorry for the interruption. So likewise, few illustrations are also there. So here in the second question, state whether the following are capital or revenue receipts. So compensation received for nationalization. So obviously, any amount received for the purpose of nationalization, we can say that it is a capital receipt because it is not a recurrent in nature. Dividend, it is a revenue receipt. Means every year periodically, for 3 months or 6 months, you will be getting dividend on equity shares. So that can be called as capital receipt. Revenue receipt. So this is about capital and revenue. So let us see the terms capital and revenue at a glance. So any amount spent on acquiring or purchasing a capital asset is called as capital expenditure. And regarding the revenue, expenses incurred on the purchase of goods for resale will be revenue expenditure. If it is not for the resale, that will be considered as a capital. If it is meant for reselling, means purchasing of goods for the reselling point of view, that is called as a revenue expenditure. Next, non-recurring expenditure. Any expenditure that does not repeat, means frequently, recurrently. So that is non-recurring expenditure. Recurring. So if the expenditure is repetitive in nature and it is going to incur during the course of business or in day-to-day operations, we require few expenses recurrently, frequently, then that is called as recurring expenditure. So this is about complete first block. Anyone is having any doubts in the first block?
Ma'am, capital and
Are you having any, sorry?
Capital and revenue look one small doubt, ma'am.
చెప్పండి.
క్యాపిటల్ అంటే ఇది వన్ టైం ఇన్వెస్ట్మెంట్ లెక్కన మ్యామ్.
అవును,
ఓకే. రెవెన్యూ అంటే
రికరింగ్
అంటే రిపీటెడ్గా రావడం.
రిపీటెడ్గా. అయితే వై వి నీడ్ టు మేక్ అ డిస్టింగ్విషన్ మీన్స్ యాజ్ ఐ టోల్డ్ which are in revenue in nature that can be taxed as slab rate. Otherwise, it is going to be taxed on that is flat rate at the rate of 20%. So if you don't make a distinction, we will be losing the tax amount, isn't it? Okay. Regarding the computation of tax liability on agricultural income, is it clear?
Yes, ma'am.
Anyone?
It's clear, ma'am.
Okay. The next topic, which is relevant to second block, that is residential status. Usually, income tax is chargeable on total revenue or total income of a person earned during the previous year. So this scope of total income depends upon the residential status of a person. So that's why we need to know about the meaning of residential status. So whatever the incomes are to be included and excluded in computing the total taxable income, which means the income earned and received in India only to be taxed, or we can say that the income earned and received outside India is also to be taxed, depends upon the residential status. So sometimes whoever is earning income in India as well as outside India is also taxed under some situations. So if he is a resident of India, then both the incomes are to be taxed, otherwise not. So that's why just a moment. Here, this term residential status is a technical term and is determined for deciding the tax liability of a person. So this is not relevant with the citizenship actually. In order to decide the residential status, there are certain rules and regulations. So this may be, residential status may be changing year by year. Means if a person is leaving to other country, the citizenship may not be changed, but the residential status is going to be changed. So that's why we need to know a person's residential status. Just a moment. So this citizenship is not relevant with the residential status. So here clearly mentioned as residency is described in the typical way in the Act. It is neither domicile nor citizenship. So whoever is a citizen of India, we can say that he is a resident of India. Means it is mainly focusing upon particular dates in order to decide a particular assessee as a resident of India. They have clearly mentioned a rule. That is, before knowing that rule, based upon the residential status, the individuals can be categorized into the following categories. Those are a resident and ordinarily resident. Next one is resident but not ordinarily resident. Another one is non-resident. So basically, we can categorize those three into resident and non-resident. So how we are going to determine that according to the rules?
Madam, ordinary resident difference enti ma'am.
ఇక్కడ అవే చెప్తున్నానండి, ఒక్క నిమిషం. According to section 6(1), here, in order to decide a person belongs to a resident or non-resident, he needs to satisfy the following conditions. Those can be categorized as basic conditions and additional conditions. So let us come to the part of basic conditions. If an assessee is in India for a period of 182 days in a particular previous year, so an individual is said to be a resident in India in the previous year if he fulfills any of the following conditions. First of all, it is clear that based upon the basic and additional conditions, we are going to decide whether he belongs to resident or non-resident category. In the basic conditions, again, two conditions are there. Any one conditions can be satisfied. So he must have been in India for a period of 182 days. That is first one. So a 180 days kuda etlundali, not continuously, sequence avasram ledu. In 365 days, any 182 days. So madhalo on and off he may visit to other country or else come back to other. So come back to the same country. So ikkada enti, not continuous in nature. It is not necessary that the person must have stayed in India continuously for a period of 182 days. So this you need to understand first. So he may have stayed at one place or more than one place. So you know very well you can move to other state also, but you have to stay in India for exactly 182 days. Next, what is the other B condition? That is, a person must have stayed in India for a period of 60 days or more during the previous year and 365 days or more during 4 years immediately preceding the previous year. So what is this actually? It is linking two sentences. So he must have stayed in India for a period of 60 days. So first one is 60 days in the previous year. And what else is required? 365 days or more during 4 years immediately preceding the previous year. So ikkada meer okati note cheskondi. Previous year assessment year. For our this academic year, for your examination point of view, 21-22 is the assessment year, 2021 is the previous year. So in 2021, he can stay 60 days. Whatever that previous year, preceding 4 years. Okay, so 2021 ki preceding 4 years em avutayi 19 2019 to 20, 2018 to 19, like that. 4 preceding years. How many days he need to stay? 365 days. So, according to section 6, it contains 2 conditions for determining whether an individual is resident or non-resident. So, it contains 2 conditions for deciding further classification. So, if he satisfies these basic conditions, we can say that he is a resident of India. So this is purely relevant with the Income Tax Act. So it is not bothered with the citizenship. It is a little bit lengthy topic. In order to explain whatever this I told about resident and ordinary resident, resident but not ordinary, non-resident. So I would like to continue this topic in the next class. So few more conditions are there in order to categorize. Just now whatever I explained about these 3. So including problems, let us solve in the next class. So with this, I would like to end this session.
Okay, ma'am. Thank you.
Okay.